Hi guys, welcome back to Finpact. Today I am here with another Ethereum Classic Update video. Also guys, on Saturday I will be participating in XTB's Investor Day. This is where you get to hear from renowned speakers such as Wallstreetbets and many more, and you can learn from them. This is a free event. I've linked all the details down below in the description box. I will be there at this event, so stay tuned and I cannot wait to see you guys there. Now let's jump into this video. So as many of you guys already know, in July 2016, Ethereum's network hard forked into two blockchains, Ethereum and Ethereum Classic. Now, Ethereum Classic has been subject to a lot of controversy because of the hacks. But since then, they have continually upgraded their code because they have a special focus on immutability, which basically means code is law. Now, the crypto market itself has been in a lot of turmoil ever since we've had rising inflation, the Russia-Ukraine crisis, as well as the Federal Reserve increasing interest rates. And on Wednesday, they announced that they increased interest rates by 0.25%. Now, the crypto market reacted very well to this because if they had increased the interest rates to a higher amount, then we would have seen huge crashes. And we actually would have also seen crashes if they had kept them at 0%. Crypto markets don't react well with uncertainty, and we did expect 0.25% increases, which is why we saw Ethereum Classic's price increase by 4%. The crypto market itself has become so frustrating for bullish investors. It seems like we've entered in more of a long-term bearish stance because of the fact that the overall market volatility has continued for so long. We're talking the Russia-Ukraine crisis, the inflation rates. Honestly, it's been pretty much downhill since December. Nevertheless, this is not over. We will see an uptick in prices. I want to quickly show you the Bitcoin rainbow chart before we continue into the Ethereum Classic video. The reason I'm going to show you this chart is because Bitcoin is the leading confidence indicator in the market. If you see even a 5% increase in Bitcoin's price and even Ethereum, then you will see exaggerated returns in the rest of the altcoins, especially those with great fundamentals. So as you can see, this plots Bitcoin's price when it comes to BTC and USD over the years and all the different bull runs we've seen. Now, whenever you reach the red chart, that is when you reach bubble territory. And that's usually the time you're meant to sell. I mean, that's the most smart way. Then you are selling at all-time highs and confidence is very high and the market is overheating. As you progress to lower stages, then that's when you hodl or you accumulate and buy at the bottom. Therefore, you make returns when you see the next upswing. Right now, we're currently in the middle stage where things are still cheap. And if we see a further decline, which I do anticipate we will see, I believe you should buy in more at all your favorite cryptocurrencies at this point. And when you get to the blue part, you know, it's great. It means you're going to make huge returns when we see the next upswing. You know, people say timing the market is difficult. Now it is. But if you try to avoid what your emotional reaction would be, many people tend to watch videos like mine or want to buy cryptos only when the markets are going up, when actually that's the time you should be selling when you see all-time highs. Whereas when you see crashes and factors external, such as market volatility, impacting the crypto market. So not a problem with the fundamental of the crypto itself, but external problems such as market volatility. That is when you can use that opportunity to buy into your favorite cryptos. So that brings me into Ethereum Classic and why I think it is hugely undervalued compared to what we're going to see in the next all-time high. Now let's just talk about the mass adoption that we are seeing. Now Payments, which is a payments gateway, is now accepting Ethereum Classic as a method of payment. We also have a development team that is working on the development of an ETC plugin wallet. This is written from scratch and it is not directly generated by MetaMask code. Secondly, the price volatility in the overall crypto market tends to be very correlated to Bitcoin and Ethereum. Ethereum, as we know, is one of the hard forks. So Ethereum Classic does tend to follow similarly to Ethereum as well. So with Ethereum, when the Federal Reserve announced the interest rates, Ethereum reached around $2,700. And similarly, when we saw that announcement yesterday, Ethereum Classic increased by around 4%, but it's gone down to around 3.24%. But you can see the chart is very similar to Ethereum, and even if you compare it to BTC's price, very similar trajectory, just exaggerated movements, as we know that happens with the altcoins. They've also updated their current website, so if you take a look, it is fantastic. They have changed the complete layout of it, and They are informing us with all the latest news, which is one thing I want to cover, which was the ECIP 049 proposed rejection and also the rejection of ECIP 1098. I'll explain why that proposal was rejected. Now, just a quick rough recap before we go into why the proposal was rejected. So starting from around July 2020, we saw the hacks that was, just at the beginning of the bull run before it got absolutely crazy and we were all seeing all-time highs. And then we saw they had their Thanos upgrade. This was long awaited. This helped recalibrate the epoch lengths. So this was ECIP 1099. The main goal of this was to recalibrate the epoch durations, but also support the 4GB GPUs for an additional 3 years. And of course, the Thanos upgrade helped support the mining algorithm, which they updated from ET hash to ETC hash. So that was great stuff, and I've covered that in my previous video. But let's talk about one of the last few things that's happened. The Treasury proposal was withdrawn. They had a year-long discussion about ECIP 1098, and the biggest issue was whether it would gel with Ethereum Classic values. Ethereum Classic is one of the most truly decentralized blockchains out there, and they want to maintain that. An article written by Chris Hitchcock explained why this protocol and having their treasury would not be a good idea. He wanted to stick with the philosophical values of, let's keep the Ethereum Classic network classic. So he wrote this article. And the main reason he was against the treasury being implemented, which was withdrawn, so this is no longer going to take place, and I believe it was the right decision in my opinion, but he said that the whole point of Ethereum Classic is that it is decentralized, and having a treasury would negate that. So having a hard-coded set of treasury addresses locks in a selection of specific parties that will gain special privilege and influence. And that is exactly the opposite of the point of DeFi. Decentralization means that you are leaving everything to forces of supply and demand and that anyone can access it. There are no major, parties involved that run the entire thing. And it's almost giving power to specific people. In fact, he said that it had knock-on effects with censorship resistance, which is basically when the treasury beneficiaries have significant and disproportionate say in what happens in the protocol, and they can interpret what kind of censorship resistance is important. So this protocol would have reduced the chain's ability to resist external demands for censorship. This line summarizes why the protocol was rejected, to be honest. In essence, he said that the beauty of ETC as it stands is that there are no owners or directors of the protocol, and any such social attacks that threaten the sanctity of the ledger are easily repelled by its toxic, lovable, but more importantly, decentralized community. Essentially, they want to prevent those hacks that they've seen. They want to increase the security, but they don't want to compromise on the decentralized nature of Ethereum Classic. And this is especially important since Ethereum Classic's ecosystem is growing. They've got so many dApps and NFTs that are all built on that network. Just take a look at this. HebeSwap launched these NFTs, and a lot of developers are choosing to now develop on the Ethereum Classic network. The main difference between ETC's philosophy and Ethereum's philosophy is that ETC is a proof of work. So it really is truly decentralized, whereas Ethereum, is it truly decentralized? I mean, it does aim to be, but it's a proof of stake, so there is a much more monopoly power within certain hands, and it doesn't help the decentralized community as well. By the way, that's not to say I'm not an Ethereum fan. Obviously, I hate the high fees, although I do believe they have gone down recently because of the market crash. But overall, the fees are a huge issue. And Ethereum is that, major network that pretty much everyone knows and a lot of projects develop on. It is the OG, but Ethereum Classic has real legs to run on, especially when it comes to IOHK's involvement in helping advise them, but also with how they continually have hard forks to continue to develop their code. Just on February 11th, they posted that if you're a node operator, you have to update your core Geth or Besu node. Basically, they are focused on immutability, so it's focused on code as law and constantly upgrading that code. So the more they upgrade the code, the less chance they will have for hacks again. Anyway, guys, as for price predictions, I believe we can see huge rallies in the next bull run. It is not right now. You have to brace yourself and use this time to accumulate and dollar cost average in. At least that is what I am doing. And yes, it's not as exciting, but that's the way crypto markets work. I remember when I first bought in cryptocurrencies in this bull run, I bought it before we saw the previous all-time highs. Around September, October, November 2020, I started buying in, dollar cost averaging in and selling at the peaks. I've made a lot of videos on that. But in times like this, when it's not as exciting, it is scary. Many people forget why they were even in crypto. And that is the fact that we are building a decentralized community out there that is free from manipulation from monopolies and too much power in too many hands, but also building this world where we have digital currencies, methods of payments, metaverses, NFTs, so much that can take place from this revolution. So that's why when you see prices this low, and I do think we will actually fall even lower to around a $20 Ethereum Classic, I'm definitely going to be accumulating then. If you see during bear markets, Ethereum Classic reached as low as $5.80. I don't believe we're going to go as low as that, but we could go as low as $15. That is a good price to get involved. Let me just show you the rainbow chart again. If you take a look, the next all-time high, we could reach $100,000 Bitcoin around this point here. This is as predicted 2023 to 2024 when we have the next Bitcoin halving. That's when we'll see huge rallies for Ethereum Classic. I mean, just look at its all-time high in this bull run that we just saw, May 6, 2021, which was 10 months ago, $176.16. We are so much below that. Just imagine in the next bull run, I mean, we could easily, if we see $100,000 Bitcoin, we can easily see $300 ETC, $500 ETC. The point is to hodl and accumulate at low prices rather than getting scared. Anyway, guys, that's my Ethereum Classic update video. Let me know if you want to see more of this and any different other crypto update videos you want to see. I will be also posting many more stock videos. It's important to hedge your portfolio and have exposure to different asset classes. So for example, in periods of market volatility, prices of gold, which is considered a safe haven asset, tends to increase. You have to diversify your portfolio so that when you see upticks in some sectors, you can hedge that by if you have declines in other sectors in your portfolio. Really, it's about investing smart. I'm not a financial advisor, so make sure you do your own research and also get advice from a real licensed financial advisor. I'm just telling you what I do for myself and my own experiences. So anyway, guys, I'll see you in the next video. But before you go, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when I release a video. I'll see you guys in the next video. Bye.